My name is Joshua Krafchick of 369 Financial, and whether you're a current client or someone who's just curious about investing, I'm glad you're here. If you're a current client, I just want to let you know on this video that in August and September, I am going to have limited hours because Roxanne and I are expecting our second child, a baby boy, and I am still going to be working. However, I'm going to have limited hours during that time to help Roxanne out and to assist any way I can, and to make sure I'm getting enough sleep to ensure I'm doing all of my responsibilities in terms of, the clients here at 369 Financial to help you and everyone else to make sure I'm not dropping the ball, even though it's going to be crazy. And I promise, just like with our first daughter, I'm still going to be able to handle everything with no issues. So I'm not worried about that. And with the investment markets, there's a ton of noise out there with everything that's going on. We had a huge drawdown and a huge rally. All of these talks about tax laws and what's going to happen, and cryptocurrency still wild. So naturally, most of us are going to be thinking, what's going on with our accounts? Is there anything I should be concerned about? How is the second half of the year going to perform? And is there anything that I need to be doing now to make sure that I'm prepared for the next 6, 12, 18, 24 months with everything that's going on in the world? So what I'm going to break down is everything that we're seeing, what we can be doing to be prepared, what to look out for, what not to worry about. And that way, with this video here, we can have an educational approach to help keep everyone's nerves down, because investing is an emotional roller coaster. So the economy is starting to shift a little bit. We're seeing growth in certain areas such as healthcare and government, and we're seeing a pullback in other areas such as like white collar jobs and technology jobs. However, we're still seeing unemployment at about 4%, which is still healthy for the overall economy. So what this means is we're starting to see a shift towards more essential services such as healthcare and those sort of areas, things that people really need in their everyday lives. With technology, we've been seeing a lot of cuts at the large corporations because of what's happening with artificial intelligence. So those are the sort of things that we want to keep our eye out, because obviously if we have too many people who aren't working, that could be bad for the economy. However, even though we've been seeing some large cuts in certain areas, things have still been at a healthy level. Now with the economy, we have to talk about taxes, everyone's favorite subject. And there hasn't been any changes with capital gains tax rate or dividends. However, we're starting to see some scrutiny with the big, beautiful bill and certain itemizations and who's benefiting and who's not benefiting in terms of being able to save money on taxes. So in terms of taxes right now, there's nothing I'm really concerned about. We already take advantage of certain strategies for taxable accounts, such as doing something called tax loss harvesting, where we may sell an investment at a loss and reallocate accounts while also simultaneously selling something at a gain. So that way we can minimize the tax ramifications when it comes to filing your annual tax return with the IRS. In addition to that, most people are just taking the standard deduction. So the standard deduction is going to go up again. And ultimately, we're just going to have to wait and see what happens. Right now, that's why the markets have been spooked. We've had a big drawdown and then it rallied back up just because of all of the uncertainty and like the head fakes that are going on in the markets. Now, talking about the markets, things got a little scary at the beginning of the year. We had a good rally. For the accounts that we have at 369 Financial that aren't aggressive, I was happy to see we didn't really have as much of a drawdown compared to the overall markets. So that tells me that we're prepared if there is a market downturn, that hopefully we have set everyone up so that way we're going to have our accounts be more protected versus someone who's taking a lot more risk with their accounts. Now, we do have aggressive accounts at 369 Financial, and we ultimately, if there is a drawdown, we want to make sure that we have some capital on the sidelines to take advantage of a decrease in the market. And what I've been reading is a lot of economists and financial analysts feel like we're starting to enter into a new market cycle, and inflation's starting to come down, and mostly because inflation was tied to the housing market. And now that the housing market's starting to cool, we're starting to see inflation come down. And if we could enter into a new cycle, that could mean a new bull market with investing into the future. But we don't know, because there's certain things going on, such as Iran and the Israel ceasefire. Is it happening? Is it not happening? We saw oil prices spike. There's just so many different things going on in the short run. However, if we take a step back and look at the market as a whole, we know that ultimately, there's some fluctuations in the short run, but if we look at the long run, ultimately the market is in place where putting your money with a long-term vision is ultimately been a great investment over the long term. And we'll want to watch out with interest rates. Is the Federal Reserve going to signal that they're going to cut rates? We don't really know. a forecast is only a forecast. It's never a guarantee that they're going to actually do something. Now, something else you might have been reading about is cryptocurrency and what to do with that asset class. And it's still a speculative asset class. Charlie Munger and Warren Buffett of Berkshire Hathaway have been on the record of saying they call cryptocurrency, quote, rat poison. Investing in cryptocurrency, no one really knows what the future holds because it is still a speculative asset. We have looked into different companies that are investing into cryptocurrency via the blockchain. And what we believe with the blockchain is it's going to help companies be more secure in terms of protecting themselves from things such as like financial crimes or getting hacked. The blockchain acts as a security measure to help those companies prevent, financial fraud and things of that nature, especially in the banking and insurance industries, things that are more susceptible to cyber risks. So with cryptocurrency, if you've been curious about possibly dipping your toe in the water, unless we've already had a discussion around it personally at 369 Financial, I would suggest staying away from it. There are companies that we have inside of our portfolio that are investing into the cryptocurrency space. And that's why we invest in smart companies. We want those smart companies to do smart things with their capital, so that way we can set ourselves up for success in the future as much as humanly possible. Now, one of the biggest things that have taken the main stage this year is tariffs. So let's zoom out on tariffs. And tariffs have been at the highest rate in decades. And it's a word that we might have remembered from school. However, now it's reality, and tariff rates have obviously hidden their highest rate in decades in terms of the United States placing a tariff on certain goods that are being imported from other countries. These trade deals were one of the main reasons we saw a decrease in the overall markets at the first half of the year. We've seen a good bounce back, and financial institutions such as Goldman Sachs are starting to change their view on how tariffs could impact the overall economy. They're even saying that we could see a better outlook in terms of our gross domestic product here in the United States. And gross domestic product is the growth of our country. And if gross domestic product decreases by 2 quarters in a row, that's when we would enter into everyone's favorite R word. I'm not going to say it. Now, to combat tariffs, artificial intelligence is one of the main drivers to help with the growth of the economy in the world. Because in the 90s, when the internet was introduced to the main stage, we were able to see a huge shift in productivity, meaning if I'm working and I have an output of 1, and then I'm introduced to the internet, and for the same amount of time, I can do an input into productivity at 1.5 versus 1, and you look at that at scale, that allows companies to be more productive, that allows them to have higher profits, and that allows the economy to grow faster. And that's what we're starting to see with artificial intelligence. So if we are able to see a bump in the production of not just the United States, but over the globe, that would allow us to enter into a new cycle that a lot of experts are saying, and we were hoping that cycle would be a bull market. However, if we are able to have some bumps along the way and we have some pullbacks, I'm confident with our strategy that we're already prepared because we were already tested at the beginning of the year when the overall markets were drawn down. I believe the S&P went down like 20%, somewhere in that range. One of the biggest factors, or one of the bubbles people have been talking about, is the student loan debt that has a lot of borrowers feeling a little bit uneasy because student loans, when they come out of forbearance, that means there's less money that can be pumped into the economy. And that's been a little bit of a concern. And we've seen and heard from Jerome Powell, the Federal Reserve Chair, talk about this in front of Congress. As of right now, student loans are one of the debts that can't be discharged through bankruptcy. And there have been talks about allowing student loans to be discharged in bankruptcy because ultimately those are one of the debts that have taken over. And I'm not sure if that would be good or bad for the overall economy. It's just one of those things that have been talked about in terms of what could possibly happen with the student loan debt. I actually did an analysis in terms of the student loan debt, and even though it is a large number, based on the size of the United States economy, it's only a small fraction. So even if we do see some defaults on student loans, it doesn't seem like it would be as large of a scale as the housing crisis of 2008, which that's what people are somewhat comparing it. But the size of the housing market versus the size of the student loan market is way different. So what should you do with all this info? If you're an existing client, feel free to reach out anytime. We're going to continue to do these regular updates every quarter just to keep you in the loop of what's going on. If you're a new viewer and you have questions, you can feel free to reach out to me directly at josh@369financial.com, or you can go directly to our website, www.369financial.com, and check us out. And if you feel like we could possibly be a good fit for you, you can go ahead and schedule a no obligation consultation. So bringing everything together, we had a scary beginning of the year. We've had a good rebound. We're unsure of, could we enter into a new cycle? Are we going to see some more bumps along the way with tariffs? What's going to happen with oil prices and everything that's going on overseas? In the short run, things could seem a little bit uncertain, but what we do know is if we aren't investing, one of the pieces of the world that was made by people is inflation. And if we're not making sure our dollars are appreciating at or above inflation, we're going to find ourselves falling behind on the times. So as always, you want to focus on growth. We always want to be growing. We want to focus on having strong family values. And it's important not just to take, but to also give back. So I'm Joshua Krawczyk with 369 Financial, and we'll see everyone next time. Bye.